Hello, it's Robert Miner with Dynamic Traders Group with our daily DT reports, 3-minute update and trade strategies. Whether you trade the market that we look at today or not, take a look at this video because you're going to learn something about trade strategies that you can apply to other markets and other time frames. Well, let's get at it because we're going to look at something very specific and a fantastic opportunity coming up in a few days. We're going to take a look at the stock indexes today very briefly, but we got a great trade setup coming up in a few days. If you haven't taken advantage of the bear trend so far, which we alerted you to in our reports at least a week or so ago, to be prepared for that. Really, the best setup's going to come in a few days. As W.D. Gann said, what's the safest trade? And that's following the initial reaction to the higher time frame reversal of trend. And that in Elliott wave terms would be following the end of a corrective wave B or a wave 2. So that's what we're going to look to identify in the next few days. Here's the weekly SPX, the cash data. We made several bearish confirmation signals in the last week. We won't go over them in detail. We'll just take a look at our weekly momentums, our dual look back bearish, and not oversold should be bearish. The immediate trend should be net bearish for at least another 2 to 3 weeks, and any rallies should be minor corrections. Eventually, we should continue lower to at least 2650 and not make a corrective low prior to the second half of June. There's some time factors that are indicating much later than June that we're going to be net bearish. We'll cover those maybe some other time. Here's the daily. And the daily momentums made a dual look back bullish reversal. And I'm recording this, by the way, on Tuesday about 1:45, Tuesday the 14th. So this day, of course, isn't complete. But we've made a pretty strong snapback reversal to yesterday's big down day. We've got a pretty big up day today. Daily momentums are bullish, not overbought. It means we should be sideways to up for at least another 2 to 3 days. But this is a really clear 5-wave decline to complete a wave 1 or A. This is a corrective rally that we're making. So a great setup in a few days if we can identify the end of this correction. And this decline so far is overbalanced in both price and time, any decline since the December low. So this is more than a minor correction. This is the beginning of a higher time frame correction that should last anywhere from several weeks to several months. Here's what you want to look out for over the next few days. Number one, we should be sideways to up for another 2 to 3 days. So if you're a short-term trader, you'd want to be oriented to the long side. And, you don't need any complicated technical analysis to come to that conclusion after looking at this big decline we have in this sharp reversal today. But here's what we want to really look for, because the higher time frame trend should be bearish. An ideal correction to this initial wave 1 or A down would continue into at least late Thursday. Let's go into Friday to the following Monday, sometime around and then. And again, we should have another 2 to 3 days of sideways and up. Ideally around the 50 to 62% retracement, which happens to overlap the wave 4 swing high, the typical target for a correction following a 5-wave trend. So right around 2880 to 2900. And right around, let's just say between Thursday and Monday, we should complete a wave 2 correction, followed by the continuation of a bear trend to not just a new low, but reaching that 50% retracement and continuing at least into the second half of June, which is at least another 4 weeks altogether. 4 to 6 weeks. And again, we've got some pattern relationships because of this overbalance of time and price and some time targets that continue well into the fall, but we'll address those another time. So look for this over the next few days, the end of a corrective rally followed by the continuation of the bear trend.